Today, I'll share a stock poised for a big breakout in 2025. This isn't just another stock tip. I'll explain the key indicators that make this opportunity compelling and show you how to use them as a guide to identify other potential winners in 2025. The stock in question is Nvidia. Now, I know what you're thinking, Nvidia again, but hear me out, because what's happening right now is fascinating. Between October 2022 and June 2024, Nvidia skyrocketed about 1,000%, which even prompted a 10-to-1 stock split. And it's precisely this combination of proven performance and recent stock split that makes it one to watch closely for 2025. Let me take you back to Nvidia's beginnings. When they went public on January 22nd, 1999, shares were just $12. After a quiet start, Nvidia has since experienced three major uptrends that follow a particular pattern. And here's the thing, one that's setting up again right now to repeat the next uptrend phase, and why we want to keep a keen eye on Nvidia for 2025. Let's talk numbers, which are nothing short of mind-blowing. Over the past decade, Nvidia has climbed around 28,000%, and since its IPO, over 300,000%. This growth has catapulted Nvidia to become the world's second most valuable company with a market cap of $3.5 trillion, sitting right behind Apple and above Microsoft. Absolutely incredible. Nvidia's transformation from billions to trillions took about 15 years, but the most explosive growth happened recently, driven by unprecedented AI demand. This makes it one of the fastest billions to trillions stories in tech history. Now, let's break down that stock price pattern I mentioned earlier. After its IPO, Nvidia stayed in a 17-year consolidation period. Now, here's a pro tip. This is actually quite normal. Stocks often move sideways for extended periods of time after IPO, waiting for their moment to shine. For Nvidia, that moment came in 2016. The first major uptrend saw a 650% gain between 2016 and 2018. That's when we first added Nvidia into our portfolio. Then came a 60% decline, followed by a base formation. From that base's low in 2018, Nvidia launched into its second major uptrend, climbing a no-nonsense 1,000% to its November 2021 high. History repeated itself with a 70% decline, another base formation, and then that second monster 1,000% climb from October 2022 to June 2024, which I mentioned at the very start. This brings us to the stock's current setup, which is significant to how Nvidia could play out through the rest of 2024 and into 2025. From June to August this year, Nvidia pulled back 35% and has since formed a base that's nearly 5 months old. From the base's low, the stock has climbed about 50% back to its all-time high, but has yet to embark on its next uptrend. It is still trading inside this sideways market. Now, considering the last two uptrends were each around 1,000% from the low of the base, Nvidia having only climbed 50% from the low of the base and still in consolidation suggests that those of us staying on top of what we are seeing play out here are positioned to profit from the next major stock boom. Remember this saying, the longer the consolidation, the bigger the breakout. And historically, we do tend to see breakouts and a bull run in the final 2 months of the year. Nvidia's track record shows that once it breaks out from a base and confirms a trend, it becomes nearly unstoppable. Okay, so let's dive deeper into why this pattern is so significant. You see, market psychology plays a huge role here. During consolidation periods, weak hands get shaken out, while strong hands apply patience, hold, and look to accumulate positions. This creates a more stable foundation for the next uptrend. Think of it like a spring being compressed. The longer and tighter the compression, the more powerful the release. Now, let's talk about that 10-to-1 stock split because it's crucial for 2025. Stock splits can drive up prices for several reasons. First, they make shares more accessible to retail investors. When a $1,000 stock becomes a $100 stock like Nvidia has become, more people can invest, potentially increasing demand. It's also often seen as a vote of confidence from management, boosting investor sentiment. The split also increases liquidity, which can attract institutional investors and make options trading more accessible. For Nvidia, the 10-to-1 stock split combined with the base it's currently forming has the very real potential to create powerful upward momentum as more investors jump in at the lower share price. Looking at Nvidia's story, the company has consistently demonstrated its ability to innovate and capture new market opportunities. Their success in the AI space wasn't luck. It was the result of years of strategic positioning and R&D investment. Consider their market approach. While many tech companies spread themselves thin, trying to capture multiple markets, Nvidia has maintained a laser focus on developing best-in-class GPU technology. This focus has allowed them to dominate not just one, but multiple high-growth markets that all depend on powerful processing capability. Their data center revenue growth has become particularly impressive, growing from just 13% of total revenue in 2016 to over 50% today. This shift represents a fundamental transformation of Nvidia's business model from a gaming-focused company to an AI data center powerhouse. Looking ahead to 2025, Nvidia's potential uptrend could be fueled by several exciting developments. The upcoming Blackwell chipset launch is generating significant buzz in the industry. Early reports suggest it could offer up to 5x performance improvement over current generation chips, a leap that could trigger another wave of upgrades across data centers globally. Their expansion into AI, robotics, and automotive sectors also opens up entirely new revenue streams. The automotive industry alone represents a $300 billion total addressable market. With major automakers increasingly adopting Nvidia's Drive platform for autonomous vehicle development, this could become a significant growth driver in 2025 and beyond. The partnership ecosystem Nvidia has built is another often overlooked strength. They've created high switching costs for customers through their CUDA software platform, which helps lock in their competitive advantage. As AI adoption continues to accelerate, this ecosystem advantage becomes increasingly valuable. So, what are the signs we're looking for to start buying into Nvidia stock? First and foremost, we want to see a clear breakout from this base. Jumping in now could be premature. Nvidia might stay sideways for months. Let the stock dictate the timing. We're looking for a decisive move out of consolidation, followed by a confirmation of the uptrend through a pullback and subsequent breakout. Now, be careful of fake breakouts. We saw one in late October. This is why patience is absolutely crucial. A key aspect of our strategy is position sizing. While we're bullish on Nvidia's prospects, proper risk management is essential. Consider starting with a smaller position and adding to it as the trend confirms. This approach lets you participate in the potential upside while managing downside risk. Once the next uptrend is confirmed, we'll start adding more Nvidia to our portfolio. We've been holding since early 2023, and it would go against every good investor's rulebook not to increase our position when the next uptrend is confirmed. Remember, compounding is the often discussed but rarely executed secret sauce to wealth creation. But patience for now. Standing aside whilst being aggressively prepared to act when the time is right is also a position, a stance people regularly overlook. Great investments often require waiting for the perfect setup. With Nvidia showing all the signs of preparing for its next major move, 2025 could be another remarkable year for this tech giant. Nvidia's rise has been remarkable, and now two other AI giants are striving for similar success in the stock market. In this video, I compare Palantir and Supermicro to see which AI stock might outperform the other.